What's up, everyone? This is Silver Slayer, and welcome to your daily silver stacking video. Thank you for tuning in and supporting the silver stacking community. The best way to help this video out is by liking the video and leaving a comment. I would really appreciate if you do that. Throw your 2 cents out there. I would love to know what you think about this crazy article that I found. Now, silver stacking can be extremely frustrating. Silver doesn't do much, especially looking like over the last 10 years, the average price was $15. So I can get it. I get why people are frustrated, especially the ones that bought last year at $30 during the big Wall Street silver movement. Now silver's down to 25. I get it. I used to get frustrated too. But that also, I think, has to do with a sense of false pricing, of false hope, usually misled by someone or a piece of information making silver sound like it's going to explode a lot sooner than it is, or that it's a different type of investment. And I mean that by this. Silver is not a get-rich-quick scheme. It's a long-term investment. It's a long haul. You're putting your money in a time capsule as the dollar depreciates. But I'm not selling for 20 plus years. And if you're someone who got into the market thinking you're just going to sell in a couple of years, then you're in it for the wrong reason and you're going to lose a lot of money. So it can be frustrating, but if you understand silver's true value, then right now you're not frustrated. You're celebrating because silver's so cheap and you could add more silver to your stack and lower your dollar per ounce average, then in return to make a lot more profit when you do so in the future. So anyways, I found a crazy article, okay? I found a crazy article. And by the way, if you love silver, like the video. If you want a chance to win some free silver, like the video. And if you also want to enter that silver giveaway, I'm picking 2 winners, like the video, subscribe, and go enter. The link will be in the description. So, on that note, silver will explode and fake money collapse like in the third century. So, and also in third world countries. If you guys don't know, in some countries, they carry their money in trash bags and they weigh their money on scales because the amount of time it would take to count all those dollar bills or all those, their paper currencies at the cash register would take hours. It's like a US dollar bill having the purchasing power of like 5 cents. So if you want to buy something for $15, you have to hand over hundreds of these bills. So they just weigh their money. They carry their money in trash bags. You see some people holding up signs like says broke billionaire. That's why you have the Zimbabwe $1 trillion bill. That is something to really take note of. And some countries actually switched their currency to Bitcoin, to crypto completely. That is the fate of every fiat-based system, including the US dollar. It's just going to take us longer because we're wealthier and because we own the most gold. We determine a country's wealth on how much gold they have, which is interesting enough to say. And the dollar is only as strong as people think it is, and that is because it's not backed by anything. So if people think the dollar's not strong, it literally isn't strong. So anyways, that's just a little introduction to this article. So history repeats itself with staggering similarities. The crisis of the 3rd century and today have much in common. All empires have the seeds of their own destruction within them. So if we look back almost 2,000 years ago to the Roman Empire, we'll find exactly the same symptoms as today. Deficits, debt, excessive military spending, debasement of currency, breakdown of trade, plague, revolts, wars, and hyperinflation. This is exactly what happened in the crisis of the 3rd century, and right now the world is facing the same disasters. When Marcus Aurelius' son Commodus, which is in the picture, became emperor in 180 AD, the silver content of the denarius coin was almost 90%. But then gradually costs were soaring and revenues declining, so the empire was running out of money, and gold, also silver. More and more money was required to bribe a disloyal army. So by 235, the situation became serious as many Roman legions were defeated by the Germanic peoples. The Roman generals also fought each other for the control of the Roman Empire. Between 235 AD to 284, there were more than 50 emperors, most of them murdered and killed in battle. The finances of Rome declined rapidly and debts increased substantially. Taxes were continuously raised, but there were fewer and fewer who were in a position to pay tax. From 250 AD, there was also a plague that killed major parts of the population. The more it changes, the more it stays the same. By changing the names and the years to today's above paragraph, the situation is almost identical. From the creation of the Fed in 1913, the US and the dollar have gradually gone downhill, but the acceleration phase started in 1971 when Nixon closed the gold window. 1971 is when the dollar was no longer backed by gold. That was when we got rid of the gold standard. And if you look at a chart, it's crazy. If you look at a chart of the dollar's strength, as soon as we got rid of the gold standard, the dollar just plunged. It's insane. The dollar has lost 98% of its purchasing power, its original purchasing power, 44% in the last 20 years. It is insane. So anyways, again, the similarity with Rome is astonishing. The real decline started in 235 when the crisis of the 3rd century began. At the time, the denarius had 50% silver content, which over the next 50 years declined to 5%, a 90% fall. Emperor Gallienus presided over the final fall in 260s AD. So look at this. You can see it is crazy, right? The strength started up here, 95%, and bam. The dollar has lost 98% since 1971. Wow, I didn't even read this part yet, but hey, guess what? I was spot on. I haven't even read through this whole article, but it's true. The dollar, it's not a fact, it's not a, I mean, this isn't a fictional number. It's not 99%, it's not 97%. The dollar's literally lost 98%. It's not just a made up number. The situation today is even worse. In the 50 years between 1971 and today, the dollar's lost 98% of its real value, measured in gold. The fall is now accelerating, as the graph below shows, and the dollar's lost staggering 83% in the last 20 years since 2000. Wow, 83% in the last 20 years. I was thinking it was 44% in the last 20. I don't know where I thought that from. But anyways, the U.S. dollar versus gold, 2002. That's weird. That's one of the first times I've actually got a percentage wrong like that. I'm rarely wrong, but now I'm glad I saw this because now I won't be. But anyways, the U.S. dollar versus gold, 2000 to 2020. The dollar's lost 83% versus gold since 2000. Next move is to 100% loss. And then what happens? What happens then? You ever thought about that? Every fiat-based system has collapsed. They last about 100 years, and then they fall. Every single one. And actually, in the podcast that we recorded, Federal Chairman Jerome Powell talks about another currency replacing the dollar in that podcast. Well, that we show the Twitter clip. He mentions, the Federal Reserve Chairman mentions that we might have to find a new replacement of the dollar. Now, I think it would be something along the lines of cryptocurrency, but they can't control crypto, so I don't know what it would be exactly, but it would be something like it digital. The symptoms are the same, but the dates change, right? Hyperinflation is coming. We don't have hyperinflation yet, which is typically defined as prices go up 50% per month. But with the dollar having lost 98% in over 50 years and 83% since 2000, it only has 2% to go to zero. And with the massive money printing and credit expansion that is now taking place, I cannot understand how anyone believes we can avoid it today. And exactly, like the stimulus that was thrown out, trillions of dollars in stimulus, trillions of dollars going out to, for the virus, it was already 98% before that. Now we're $30 trillion in debt. The dollar is not going to last. Human beings always think that it is different today just because we are here. But how can anyone think that we can solve a debt problem with more debt? Exactly. That's what I always say. We're trying to get ourselves out of debt by replacing it with more debt. That's like trying to pay off a credit card with another credit card. It's going to catch up. And when we look back at history, currency collapse and hyperinflation is very frequent. Just in the last 100 years, there have been over 60 hyperinflationary events in the world. And in the last 2,000 years, the number could easily be over 1,000. What is totally different today is that the whole world is in a similar situation, and when hyperinflation starts, very few countries will be able to avoid it. A global hyperinflation will clearly be both spectacular and devastating. It is not a question of if, only when. Many are saying that we have no inflation today, so how can we get hyperinflation? What few understand is that hyperinflation is a currency-driven event. It arises as a result of currency collapsing, and the currency collapses due to massive money printing, which we are seeing the beginning of now. Quantitative easing, QE. But we're already seeing the first symptoms of hyperinflation with the U.S. money supply growing exponentially. I mean, and then look, this chart stopped in April 2020. Imagine if you looked at the chart now. I mean, this stuff is insane. Stocks are down 70%. How can any investor with even an ounce of analytical ability notice that since 1999 stocks are down almost 70% in real terms? Real terms obviously means gold, since it's the only honest money and the only money that has survived in history. It is also the only money that over the millennia has maintained constant purchasing power. An ounce of gold 2,000 years ago bought a good suit for a man and still does today. It seems that for a great number of investors, stocks are the only investment that look at and believe they understand. They don't understand enough to realize that stocks in this century have been extremely poor investment in real terms. What they can't fathom is either that stocks are now entering a major secular bear market, which will be devastating. And there's some good points there. An ounce of gold 2,000 years ago could get a man a good suit. An ounce of gold today can still get a man a good suit, right? Gold's at what, like $1,700, something like that. That's insane to think about. Imagine if 2,000 years ago you had that in like fiat currency. Nowadays, that would be worth nothing because the purchasing power depreciates. Silver and gold are timeless. A walking Liberty $0.50 used to be able to get you a gallon of gas. That same exact coin could get you a gallon of gas today. Back in the day, it was the 50 cents face value that gas was 50 cents. Nowadays, gas isn't 50 cents, but that walking Liberty, you can walk down to your local coin shop, sell it for $10, and get yourself a couple gallons of gas. You see how gold and silver are literally timeless? It's like putting your money in a time capsule. That's why. That's one of the reasons why you want to preserve your wealth and put it in something as the dollar depreciates. So, and that's another thing why you can't be frustrated, because it's not even about the price. No matter who says that 1 ounce coin is worth what's irrelevant. The price tag of silver, the spot price, is irrelevant. You're putting your money into something for reasons beyond most people even realize. So, anyways, if we look at the chart, the Dow is down 67% against gold in the last 20 years. The correction to the 1999 2011 fall finished in 2018, and now the ratio is on its way to below the 1-to-1 level, which we saw in 1980. Dow and gold were both 850 then. I believe that we will see less than 0.5-to-1, which the long-term trend line is. Man, this is a crazy article. This is a crazy article. Wow. Man, this is a crazy article. So, anyways, let's go into gold and silver. So, Egon von Greyers of Gold Switzerland says silver explosion is imminent. Initial target $22-24. Silver positives. 1, massive money printing currency debasement. 2, major shortages, LBMA and COMEX. 3, superb technical picture short and long term. 4, gold silver ratio to collapse. And yes, that's what I was kind of talking about, how silver is undervalued, because the gold to silver ratio should be around 16-1. Actually, it should be 8-1, because that's the ratio it comes out of the ground. But for thousands of years, it's been 16-1. Right now, it's 70-something-to-1. And a natural or normal ratio, I think, in today's time would probably be 50 to 1, but obviously that's still out of whack. But if we're trying to be realistic, probably 50 to 1. So that's still a lot. And actually in 2020, we saw it as high as 125 to 1, which is insane. So anyways, um, silver was at $15.56 at the time of writing this tweet, and now it's at $18.30. Silver is a leading indicator for metals, and this recent move is very significant. The important point I made in my tweet was the gold to silver ratio will collapse, and this is exactly what happened. It went from 110 on the 14th to 98 on June 2nd, a fall of 11%. And man, if he only knew what it was now, went down all the way down, and now it's down much, much further than 98. A falling gold to silver ratio is a prerequisite for rising precious metals. This means that we now have confirmation. This is it. The turn is here. Silver is up, gold is up, euro up. Gold silver ratio crashes, stocks down, dollar down. So the ratio will continue to fall towards 30 initially, as said in my tweet on the 29th. This means silver will go to the old high of $50 and above, but it won't be straight move, and there will be major volatility. This is why I recommend hold more physical gold than silver. Gold moved more slowly than silver, but the old high of $1,920 should not take too long to reach before much higher levels, which he was right. Gold broke past that level. Its all-time high is actually above $2,000 now, so he was correct with that. But then he also says, as I always point out, don't focus on the price moves and precious metals measured in worthless paper money. And that's what I was just saying. The spot price is irrelevant. The price tags are relevant, right? Because the price you're looking at is worthless. It's a fictional number anyways. Instead, hold physical gold and silver protection against the coming collapse of the currency systems. See, I thought this was a great article. I thought it explained a lot, and I really hope you guys understand why you shouldn't be frustrated, because you're looking at, a fictional number that's getting you frustrated, and it's relevant. Remember that 2,000 years ago gold suit term, right? 2,000 years ago, an ounce of gold could get a man a good suit. Nowadays, it's still 1 ounce of gold can get a man a good suit, or the gas station term as well. That's a good one. So yeah, I'm going to wrap this video up here. Please like the video if you thought this was educational or informational or at least entertaining. Please like the video. It helps me out a lot. Also, leaving a comment. Let me know what your favorite thing was about this article. Or even just say, hey, what's up, Slayer? Just engagement really does help. And I would appreciate if you did that. So yeah, make sure you go enter my giveaway as well. May the luckiest stacker win. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.